I'm about to share with you how to find the best trading setups inside the New York session based on the clues that the London session leaves behind. Now it's super simple, and once you learn it, you'll be able to implement it into your own trading time and time again. So let's jump over to the charts where I have NQ or the Nasdaq, and we're going to be covering the two elements here. First of all, it's the higher time frame narrative, where we're just using the 4 hour. Don't worry about the daily, the weekly, the 1 hour. It's just the 4 hour for direction and looking for trends, which we'll spot shortly. And the second time frame will be the 15-minute, where we spend most of our time in the New York session looking for that specific entry model. And I'll share with you exactly what this system is that you'll be able to implement. And once you've seen it, you won't be able to unsee it. Trust me. But before we continue with the video, if you're new here, welcome. If you've been here before, welcome back. And just make sure before you watch the rest of this video that you are subscribed to the channel. It means a lot. About 50% of my viewers are not subscribed. And the more subscribers I have on the channel, the more time I will be able to reinvest into giving away more content for free. Now I have 4 areas of interest marked on the charts, which I'm going to zoom down to the 15-minute, but let's cover the 4 hour and why I've chosen this. So just zooming out, first of all, we have this area in April where we saw the Trump's tariffs, that sell-off here. And what I'm doing here is I'm identifying a turning point in the markets. If we're trading the Nasdaq, the US indices, it's an index, so it's bullish over a long period of time, right? So yes, we can sell it, but ideally we want to wait for a shift in market structure on the higher time frame, this being the 4 hour, and waiting for those buy setups. So what we do, or what I do, is I identify either external range shifts, this would be an external range, or I identify internal structure shifts inside of here. Now, the difference between the two, it really depends on what's created this larger range. Now, for me, the Trump's tariffs and seeing that stock market crash, that's not something that's typical. So if we're expecting price to break above these highs again, we have quite a long way to go, which we've now reached all-time highs, of course, but we had a lot of room. But you don't want to be waiting around for that. In a typical market condition, that 4 hour bearish range would be much, much smaller. But as this is much, much larger and we're expecting a shift in market structure, we can look at internal range. So let's remove that. That's not the source, by the way. We're just getting going. So we have this 4 hour breach to the upside. Why am I using this as market structure? Well, we can see this low failed to close below this low, right? And then this high, which you could say is a turning point, that's the point that should have broken the low. It then got broken by price here, which did what? It then created an internal higher high. So we now have a new 4 hour, what I call a 4 hour dealing range. So if we are now looking for buys, that's why I have this area highlighted in specific, because we could be going over weeks and weeks and weeks of data here. But really we're looking at this inside range here, where price is breaking internal of this range, as well as the narrative that price is going to push higher overall. First of all, targeting, by the way, the Trump tariff highs, and then second of all, the all-time highs, which we know prices had gone and met. That's the 4 hour, right? This is obviously a complicated bit because we've got the Trump tariffs, but after then, what we can identify is price pretty much stayed bullish the whole time. If I use 4 hour range boxes to note, we have a 4 hour sweep of liquidity here, which I'll mark with a circle. And we'll cover all of this just quickly to simplify it for you. I want to make sure you understand the 4 hour before we cover anything else, because the 4 hour really is key. It's that key driver. Looking at this, how it just wicks and does not close below. So it's a sideways consolidation, but we're still bullish. And hence why we have another area of interest to take buys inside of there. We are still bullish inside of here again. Now we do see a temporary shift bearish inside of here. So I'm going to mark out that final bearish range, which actually is here on the 4 hour. So again, we're looking for buys inside of this area, where we continue bullish once more. And let's keep going. We're almost there. Now we see potential shift to the downside, and we basically consolidate for quite some time inside of here, where we really don't do all that much. You can see it wicks to the upside, back inside the range, wicks to the downside, back inside the range, wicks to the upside, wicks to the downside, and then we finally commit beyond this area, we see that bullish close. We take a significant area of liquidity below here, and then we continue bullish finally until we come to pretty much where we are now, right? So bullish range, and then literally only yesterday we actually shifted bearish. So that's what we're looking at, right? So now let's jump down to where the actual proper source of the video is, and I'm literally sharing this for free. This is exactly how I trade NQ on futures in New York session. I'm not holding anything back, right? This is exactly what I teach my students, and I'm teaching it here for free for you guys as well. And I'm not selling anything in the video either. So hopefully you'll stick around to the end, because this is just me getting started. That's the 4 hour, which we don't want to skip. Why do we not want to skip it? Okay, maybe it's boring, but you know, this is the 4 hours, the higher time frame. It's what gives us our bias. So we are only looking for buys, because internally and now externally as well, we're printing higher highs. So I'm just going to mark out certain areas of interest that I'm going to be covering. And why am I covering those? Because these are areas where we see consolidation and breaks to the upside. That's where we're going to see that volatility, and we're more likely to be able to catch a trending market. We don't want to catch the end of a trend. We don't want to be too soon and presume a trend is going to start before having confirmation. So we've just had confirmations to the upside down here. We have more confirmations that we're outside of this ranging market inside of here. Although it's still a bullish market, it's just ranging on a lower time frame, that continuation. We get somewhat of a similarity inside of here, although like I say, it does actually shift bearish. If we move across here, we can see we get lower lows and lower highs on the 4 hour. So we'd need to wait for a 4 hour shift, which we get from here around the 26th of May. And then we get another sideways consolidation. Actually doesn't really do an awful lot at all for about 3 trading weeks. And then we break to the upside again. We can actually use that final bearish 4 hour range, and the arrow is just outside of that. So we're waiting for that confirmation that either consolidations are ending with continuations to the upside following the higher time frame trend, or we've seen a break in market structure from a bearish 4 hour market to a bullish 4 hour market, right? So now let's jump down to the 15-minute, and we're going to work our way through. Okay, so we're inside this area now. This box to the left is the 4 hour range that we have broken outside of. So Wednesday, the 23rd of April, 25, where we had that confirmation to the upside. And we're now waiting on this current 15-minute time frame for an entry model, which I'm going to keep super simple for you guys. So we have the Asia range, of course. Most of you are not going to be trading that. Most of you are likely New York traders, or London if you're in the UK. So I'm really talking to you UK-based and US-based traders to help you with this. So we're either looking for London to liquidate a previous session, ideally Asia, or based on whether London takes liquidity in Asia or not, then we're acting on New York, looking for a liquidity sweep or a continuation. So essentially, if London, and I'm going to draw this on here separately. So if we have Asia session here, and London sweeps and continues, then I'm expecting New York to just continue like that, right? So we have Asia session, London comes back and sweeps Asia session and continues. Then New York, I'm not expecting a liquidation inside of London. I'm expecting that continuation in a trending environment, right? Not in a 4 hour range bound environment. However, same thing again. If we have Asia session, price does its own thing, likely consolidates, and London continues like this without sweeping Asia, what am I expecting New York to do? I'm expecting New York to come back and take London lows at least, and I'll draw on London session for you. So let's say this is London session here. We've got London lows, London highs, and then we have New York like so. I'm expecting at least London lows to be taken for a continuation during New York. And depending on how much London session pushes, it may come back and actually take Asia session along with it, right? So we're going to go through some examples of this over a period of months. So it's not just I'm picking one trade because that's what played out. And there's probably some areas of losses in here as well, because nothing is foolproof. Nothing has a 100% win rate, right? I took a loss on Monday trading this exact system, and then I made it back with a 2-to-1 the following day with an extra 1% on top, right? So it happens. So let's have a look inside of here. So we have this area of consolidation. on the 23rd, and then heading into the 24th, which is what I really want to look at, is we have this Asia session box here in purple. And then if we look, what happens? We're expecting upside based on what we've covered on the 4 hour, right? So although 15-minute is pushing lower, London session is in the blue and green is New York session. So what does London session do? We have Asia here. London comes down, it takes Asia lows and then reverses and continues to the upside, right? So what am I expecting New York to do based on the drawings I explained earlier? Not to liquidate London, right? And that does continue. So it's at that point, I'm more likely to drop down to a lower time frame inside of New York and look for those continuations, whether it's a 5-minute, 2-minute, 1-minute, okay? Or you do nothing if you are trading the 15-minute. Alternatively, if you're a session trader during London, you can actually trade this London liquidation. If you are bullish and you're waiting for a London retrace candle off the 15-minute, and targeting the immediate 15-minute highs, you've got anywhere between a 3 and a 5 to 1 with a very conservative stop loss, right? Why would you be taking entry there? I mean, not only does it take Asia lows, but it takes all of this internal range liquidity very soon after 4-hour market structure shift to the upside. So it's a very, very good place to enter. And it's the first example where London takes Asia and then New York continues without coming back for liquidity during London session, right? The next day, we have the second example. So there's either two scenarios here, right? This next one, we can see Asia session, lows and highs. London session's inside of that, right? Doesn't take liquidity. So what does price do during New York or just slightly before? Comes and takes that sell side liquidity, gives an opportunity to go long, and then continues to the upside. So retrace candle inside of here. Again, a conservative stop. You can place your TP around 2 to 1, depends on, I'm being very, very, very conservative with stop loss here for the nature of the video, of course. You might get in with a tighter stop. You may even enter off a 5-minute retrace candle, but let's stick on the 15-minute for now. But again, a 2 to 1. And this is based on the fact that London did not liquidate Asia. So New York's likely going to liquidate. And I'm not looking for sells. Remember why? Because we've done our work on the 4 hour. We're only looking for buys. That's it. Next day, what happens? Remember, we're looking for buys. So if we have Asia lows here and London lows do not liquidate, okay, it's pushing high. What is it doing? It's inducing early buyers. What do we expect New York session price to do if London doesn't liquidate Asia? Liquidate, right? So it pulls lower. We get an opportunity to go long. We get a retrace candle, first of all. But let's take this one across. We get an opportunity to potentially go long inside of here. You might want to market execute. We need to look for areas of protection. I'd go below these lows over here. And we have a 2 to 1. You might be thinking, okay, hindsight trader, you get stopped out there with a tighter stop, potentially, but okay, you just re-enter using the same stop loss. The trade idea is still valid. You're still inside the same session. You're only getting into a position 60 minutes later and you recover that loss. You get a 3 to 1 instead of a 2 to 1. So you're still net positive 2 to 1 after that loss. We have another example literally the next day. And then I'm going to zoom out and go to a different time period, right? So Asia lows, London inside. Doesn't liquidate. What's New York going to do before we start taking buys? It's going to liquidate. It does so. What do we have? We have a long opportunity straight off the 15-minute. Shows you don't need lots of chart time and you don't need the lower time frames. You can get in and out with a 2 to 1 before price consolidates and comes and closes that. The reason I'm looking at 2 to 1s and 3 to 1s is because if you're trading futures, you all know you have to close your positions before the end of the day. This is not swing trading, this is day trading, right? So even with a potential loss inside of here, you've got plenty of opportunities inside this, following that very simple system. And how mechanical is it? You guys love mechanical trading. It's very, very mechanical. That's the first area. I mean, you have the same kind of situation inside of here, same situation inside of here, same situation inside of here. I'm not going to be able to cover all of them because, of course, we're not going to have enough time. I want this to be short and sweet so you can digest this without spending an hour out of your day. Your time is valuable, just like mine is, but I want you to take value and to be able to practice this. Let's go inside this area. So we know we're very, very bullish. We've seen this area on the 4 hour we have market structure shift to the upside once more, which is why we have our red arrow to say this is where we're looking for entries. And this is a more recent week, so I'm recording this on the 2nd of July. This is the 24th of June we're looking at. So what happens here, guys? We have Asia session over here. Asia session lows. London session kicks straight out the gate, right? Doesn't take any liquidity. So what are we doing? We getting involved during London? No, we're not, right? We're waiting for New York session to come back and liquidate. It liquidates London lows and we can get involved. Okay, this one is a liquidation event before the session, but then it hangs around for how long? Another 3 hours. So if price is still anywhere in this region, you can take a buy of any of these bullish retrace candles, stops below this most recent low, and you could either target London highs for just under 2 to 1 in that case, or if we've just broken out of a 4-hour short-term consolidation, what are you expecting? You're expecting continuations? Yeah. I mean, you've got to be careful, make sure you're closing your position overnight. So let's have a look when we'd have to close by. You would have to close by here. So even if you ran up to 3 to 1 and came back, you're still making a 2 to 1 to close that. Okay, next day. We're looking for buyers again. Remember, the 4-hour is still very bullish. So Asia lows, Asia highs, London's inside of that, doesn't liquidate anything. We get that early bias situation again. We wait for New York to come back and take London lows. We get exactly that. Okay, this one's slightly late. You might have to refine on a 5-minute, but the trade idea is still there. So if you got entered on a 5-minute inside of here, stops below Asia lows, and your take profit would be at the highs of the day. You may have to close early. You may have to close early, but it's still a profitable position over like a 1.5 to 1 before closing, before the market closes. Next day, same thing again. So Asia session, we're still very bullish. Nothing's changed in the 4-hour, so we don't need to move to the 4-hour. Right out the gates, London pushes higher. What we're waiting for New York to do, comes back and liquidates. Again, the same exact thing, time and time again. It's very repeatable, very predictable, but understand we've picked the market conditions on the 4-hour to suit this kind of trading style, right? So even with a very large stop loss on here, we can close out for another 2 to 1 yet again. Okay, this is an area where we can get stopped out, so I'm going to show some losses as well, and this will be the last example I'm going to show, because up here is where we actually saw a market structure shift on the 4-hour, and we started now printing lower lows and lower highs, which is why I took a 2 to 1 short inside of here and took profits yesterday. But here we have Asia session, London right out the gates without taking liquidity. New York comes back. Now here, really depending on whether you exit the trade or not. So anywhere around here, you're taking a buy position. You probably are going to take a loss on this because you're going to hold this until kind of 2 to 1 at the very least, or until you have to close the trade. So you get a -1 there. And if you're going to take that trade later on, that's fine, but that's very late in the day, like 8 p.m. UK timing. Sorry, my trading view's bugging. If you're going to take a trade around 8 p.m. New York time, then you'd make your money back, but arguably I wouldn't be taking that trade. Like usually for me, UK time, 6 p.m., 6:30 p.m. is the last time I'm looking to enter a trade on futures, probably earlier than that, just because of the fact that I know I can't hold overnight. So this is a short, sweet video, but it's very, very powerful. It's exactly how I trading. It's exactly how I look at trading NASDAQ futures during New York session. And it's a very systematic approach that can take the stress and the guesswork out of your trading, follow the 4-hour for framework and bias, and then 15-minute for session-based liquidity based on whether London did or didn't take liquidity during Asia, that can give you predictions for what New York is likely going to do next. I hope you enjoyed the video. Hope you learned something new. Make sure that you subscribe to the channel, like the video, share with a friend, and comment below. Leave me some feedback as well, guys. There are some useful links below in the description to help you with your trading, and I'll see you in the next video.